By the way, there is this bifurcation going on, which is a big word I just learned in the real estate market. There's a property up for sale in a new, this huge, tall penthouse in New York. $250 million. It's a 3-floor penthouse that spans 17,500 feet. It has 1,433 square foot outdoor terrace, its own private ballroom, and apparently it's been zoned for an indoor pool, maybe 2. Charlie Gasparino has already put in a bid. He's very excited about that. He'll be coming up very momentarily with us, but Pierre Debbas joins us right now. Pierre could afford one of these things, maybe 2. But Pierre, someone's going to buy that. I don't know for the $250 million, but I do know that quite a few, apartments in that building have gone for $50, $60, $70, $80 million. So that group is not short on cash. I don't know how they're paying for this. It's an all-cash deal. I don't know if they're financing it, borrowing against even stock holdings that could have dropped, probably have dropped. But what do you make of that?
Neil, it's funny. Our firm's represented a number of people who've purchased in that building, and over the last 10 years, 57th Street has been transformed to Billionaires Row, which is what everybody refers to it as. And let's be honest, right? Somebody spending anywhere remotely near that much money isn't worried about interest rates, and I don't think they're going to apply to any traditional lender to get a mortgage to acquire that property. So, that's what you see when these transitions in the market happen. Is that what I'm sure we're going to talk about today is going to show how the interest rate changes are impacting lower income households as opposed to the affluent households, and the rich are only getting richer during times like this. And,
yeah, but I noticed, and this building will soon be all spoken for. I don't know what that $250 million, whether that gets that price. But bottom line, we're seeing a lot of that activity. Yet even in these rich areas, I know Idaho, which was a hot market for a lot of people, that real estate market's slowing. Some parts of Florida, they're not seeing the momentum that they were. Where do you see real estate in general going?
Well, you have to take New York separated from the rest of the country because, Manhattan especially attracts the global wealth of every billionaire around the world. So we're in a bit of a bubble here in our market. I think the nation's housing market is certainly going to encounter a significant slowdown that we've been seeing. You and I have talked about this a number of times this year, and all of our predictions have been right so far. Pricing is the rapid price appreciation is obviously slowed. We haven't really seen too much of a huge decline in pricing. I'm anticipating single-digit percentage-wise in the next year.
But you're not envisioning a crash or what we had during the meltdown. There's none of that giddiness that we saw back then?
Not even remotely close. And, I'll tell you, really, the main reason is that no matter what you think of the housing market and interest rates and the impact on values, the biggest issue is the lack of supply. And we're not creating inventory. And the Fed can raise rates.
But in some markets we are, right? And some inventory now has increased because the interested buyers have fallen off.
Yeah, I mean, you have to look at it market to market, but I think generally speaking, in terms of the entire housing market for the country, there still is a lack of supply. Clearly, certain markets are outliers in that statement. But at the end of the day, how are we going to create that supply when Jackie was talking about labor shortages, supply chain issues? Until all this is addressed and housing and stock is created, we're not going to be in a situation where you're going to see a significant decline in pricing.
So this idea that with every half-point uptick in mortgage rates, whatever the figure is, 50 to 60,000 Americans are priced out. If that were to keep going and we were to keep seeing mortgage rates, they've essentially doubled over the last year, there has to be a point where you say no mas, right? I mean, are we at that point?
Yeah, I think you're there. And I think we've seen it where, and that's where I'm talking about the slowdown in activity, is that, everybody's going to wait to see when, how is this going to impact a correction, and is it? And quite frankly, you're talking right now, Neil, I read a great stat this morning, 33% of all home purchases in the month of July were cash purchases, cash. Right. So then who's suffering, as a result of that in terms of competition is your entry level buyer and lower income buyers. And that's really what's the most upsetting part about this is that, the rapid hike in interest rates this year, which I think is absurd, the level they've increased, has resulted in monthly mortgage payments going up by around 66%, like something astronomical. And, that's the unfortunate thing is unless, you have the cash to buy it, you're stuck on the sidelines in this market. And that's what's going to be the trend for the next several years unless this rapid increase in rates is managed.
Pierre, thank you very, very much. Pierre Debbas, the Rubber Debbas managing partner, a good read of the real estate market. So let's knock on whatever. I hope he's right about a lot of the stuff he just outlined. Charlie Gasparino with just